The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Broadcasting today from sunny Philadelphia, Pennsylvania, the home of the movie trading places. They're on Broad Street at the old Rickenhouse Square and the Wells Fargo building that was the Duke and Duke offices. So anyway, Mr. Valentine is set the price today, and it looks like we have starting out with lower prices. In the stock market, looks like the Dow's going to be down several hundred handles, S&P down over 30, the Nasdaq down about 90. So it's starting out on the rocky side, but it's early. There'll be bargain hunters coming in sometime during the day, that's for sure. And whether the market ends up down here or not, but the overall patterns certainly look quite bearish from a long-term perspective. Should we take out this August 24th low, and believe me, if you look at the banking index, it's within a heartbeat of doing that already. The New York Stock Exchange index is not too far away either, but the S&P and the Nasdaq are quite a ways away. We're 100 handles away in the that's all, folks. In the S&P, we're 100 handles away because the old low was at 1830. We're trading at 1930 right now. So that's what we're looking at as we get ready for the opening tip-off here in the market. So we'll see what happens with it. When we left the John Logan's show, I was filling in for him. We were making a 61% retracement in the crude oil complex over the last several days. And we have some pretty strong support, I believe, at $45 per barrel in crude oil as a Fibonacci level. It's actually our third higher bottom. So that's another positive thing, that if you are interested in buying crude oil, this is about as low risk as you're going to get. That's what it looks like from a technical standpoint. We talked about gold earlier, and it looks to me like we're going down to that $1,112 per ounce level. Also in silver, we should get somewhere down around the 1470 level in silver, because the levels that we hit last week were major Fibonacci numbers at the 6786 variety in both gold and silver. And so far that has held. And as you can see, we're selling off today, which is what we'd like to see. We're getting a pretty good bounce in the bond market. We're almost at the 786 retracement of the last 3 days action. We did hit the 150, almost 156, and we backed off 3 handles down to 153, and now we're almost at the 786 retracement of that, coming back in at 155.10. And if that holds it, that would be the spot where the stocks would most probably, get a stock, a place to bounce. But folks, this doesn't look good in the stock market. It really doesn't. I mean, these patterns that we're looking at they're just extremely bearish, and you have to be very, very careful, because sometimes they can just melt down, so to speak, and go to levels that they haven't seen in quite some time. Because we did hit 1831 back on August the 24th. That was in that fast market with the Nasdaq limit down. I think the Nasdaq was down 140 at that point. And then, of course, we rallied for 3 weeks, and now we're going to test to see these levels. There's a really key level in the S&P at 1906. and I believe that's the 61% retracement back over this whole degree of everything we've been looking at. So keep an eye on 1906, because if that doesn't hold, then we're most probably going to take out the 1831 without too much trouble. And then that sets up the larger ABCD that comes in at 1770, and then there's one below that at 1550. I believe we're in a very, very, very significant bear market, the likes of which we've not seen for at least 5 or 6 years. And this will be a different variety, because I think this is going to be one that's just not going to stop after 18 months. I believe it's going to be broader, and I believe it's going to, bring other people into the mix here that have only traded stocks on the long side, and they'll probably be, they'll probably be punished, really badly, because what they'll do is they'll give them the bullish reevaluation all the way down. That goes back to the old Enron theory. If it's a good buy at 90, it's a good buy at 80, it's a good buy at 70, it's a good buy at 60. Good buy house, good buy wife, good buy car. And don't want to lose your car. Anyway, this is what usually happens when you average down, but not a very, very smart thing to do. Of all the things you do in trading, that is, to me, the dumbest thing that you can do is to add to a losing position. And the reason for that is your analysis is wrong. 2, you have increased your exposure. And 3, you're no longer using any type of a sound mathematical trading plan, because you're doing things that are hurting you, not helping you. Okay. All right. Now, we have a question about the support in some of these things. And this is my, when I'm looking at support here, folks, I'm basically looking at the Fibonacci numbers and the ABCD patterns that unfold. That's really what I'm looking for. I'm not looking for anything, really fancy like, a 200-day moving average or anything like that. I'm just looking at the overall technical picture of whether the support or resistance should come in at these levels. And that's all it is. It's just a technical summary of the way Larry Pesavento thinks there's, support coming into the market. That's all that means. I mean, there's some experience that goes into, of course, but these are just nothing more than those Fibonacci numbers and patterns that I look at that have, served us well in the past. So those are the types of things that I'm watching for today, and we've broken major stuff here, folks. Boy, these patterns look bad. I mean, it's I tell Sarah every morning, she says, she said, don't these people get tired of hearing it? And I said, well, I hope somebody hears it, because I have not seen this type of bearishness in a long time. Just the way that it's it's laid itself out. I mean, it's forgive the Freudian slip, but it's amazing that they do look so very, very bad. And I think the more technical people will see it, once we go below the 1831 level, then we'll have a better idea if this is going to be continuing to the downside. Right now, we have the Treasury bonds are approaching the 786 retracement of the high we made just back last week on the 20th, and we are almost exactly there. We're only three pips away of that 786 retracement here in the bonds. And here again, we came out of here with such gusto because we moved a point in just almost a point in an hour, which tells us that there's a flight to be coming into the bond market, because they want something there that will give them some short-term protection, if nothing else. And in fact, we're just hitting that number in the Treasury bonds just as we speak right now. We just hit the 155.9 level, and so we're right into that zone here where it should be some pretty significant significant support in here. So we'll see if this is going to be a place where it holds or not. But we've got some serious selling, going on pre-market in these things. With the we've got the Nasdaq. Let's see, the S&P's down 33 handles. The Nasdaq's down 87 handles. The Dow looks like it's down about 260 or more. And we got gold down $10, silver down 42 cents. Wow, I didn't realize down that much. Wow, that's a beauty. Okay, I was expecting to get down here, but not quite that fast. So that's telling us that we're probably, we don't want to be looking to buy silver on this go around. Just have to, just to wait and see, what's going to happen with it over a longer time frame. Give it another few days at least to see what's going to happen with the silver. Gold also, hit that major resistance up there at 11.45, and now we've backed off over $20. So we'll wait a few days to see if this next support holds at $1,112 per ounce, and we'll see if we can get a place to buy it. So remember, not having a position is a position, because you've got good cash on hand and you're able to, pick your spot for your next buy, and that's the main thing that you're really trying to do. Now, I want to switch gears here a little bit and get into the grain markets a little bit. The first one I'm going to cover here is going to be the soybean market. As you can see, we had a bounce off of the 707, which the difference between the 618 and the 707 is basically, it's just a trading thing. It's just a few cents. And as you can see, the rally that we had over the next 3 days was nothing more than an ABCD rally at a 38% retracement of the high that we made, way back here on the 16th. So the trend is starting to turn up a little bit, but it's still early. I mean, these commodities, folks, have not turned the corner, in my opinion. And I know we had a 250 pip rally in the Australian dollar, and we gave over 120. We gave over half of that back in a matter of a few hours over the past 24 hours. So, these commodities are still a long way from being, out of the woods, and so to speak, I guess, or out of the pasture, whatever it happens to be. But we want to watch that. If there's for trading, for scalping off, this is a very good market to trade if these other markets scare you, because the overall grain market's very, very nicely. We're going to take a little break here. When we come back, we're going to take a look at the wheat market.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we have a caller from Gloucester. Frank, are you there?
Yes, I am. Thank you.
How are you?
Oh, pretty good, thanks. Hanging in there. Love this market.
Yeah, you have to love it. I wish they would just, maybe just close it for a little bit instead of have this overnight stuff all the time.
Yeah.
It drives me a little bit crazy at times, but that's I love it. I mean, if I had my choice between this all the time and this never, I would rather have it all the time.
Well, we had a couple of weeks of watching paint dry. Now finally things are moving.
Boy, we had years of it. We had no volatility, and now they're paying the pauper now. What can I do for you, my friend?
Well, I heard you mention the Aussie dollar in connection with commodities. Yes. And I assume that you mean there's a pretty good connection there, at least when commodities are moving. I am familiar with a little ETF. The symbol is FXA. It's the Aussie Dollar Trust. I wonder if you could take a look at that for me and just comment on that connection between the Aussie dollar and commodities.
Well, it's funny that you mentioned connections. As soon as I tried to put that thing into my program, my connection was lost. So no, let me put it in again. No, well, that's computers. They love me. I can't. Just gives me. But I have my partner done a lot of work with this. With the Aussie dollar and the commodities, and there is a very, very high correlation. This darn thing is the same thing again. I don't know what the problem is.
Okay. Well, there is an Australian fund that's mostly sovereign debt, and the symbol is very similar. It's FAX, and it pays about a 10% dividend at this point, and it's been coming down, and it certainly seems to correlate with the Aussie dollar. It's the retirement fund for a lot of Australians, I guess, and it pays a monthly dividend, so it's popular.
Boy, let me tell you something, Frank. Anytime someone starts talking about 10% dividends and stuff like that, when you have to struggle to get 2.5% on a 30-year, AAA bond, there's something not right there. I don't know what it is, but it reminds me of the old days when Mexico used to devalue all the time. They would get all the people from California to go into Tijuana, and they would, open a bank account getting 14%, and then they would devalue 6 or 7 months later, and you're still getting 14%, but only on half your money. So I'm a little scary of those things. The old adage, if it looks too good to be true, the chances are it probably is.
Yeah, this is it's a lot of Indonesian sovereign stuff, I think, that gives them a lot of the high value. Well, okay.
I wish I could pull it up, but every time I try to pull it in, it crashes. So they must not want me to look at it. What I'll do later is, in fact, at the break, what I'll do is I will try to go into Yahoo, and then I can take my snag and take a picture of it. If you're going to be into Tiger TV, I'll take a picture of that at the break, and you can take a look at it when we come back. But it's XA, correct?
That's right. Okay, thank you.
Hey, thanks for calling in. I really appreciate it.
Yeah, good luck. Hang in there. Bye-bye.
Yeah, okay, yeah, thanks a lot. Okay, we'll look at that at the break, but we're going to be opening here soon with the market under some pretty good, selling. We got the NASDAQ is down 83, S&P is down 31. Looks like the Dow's going to be down about 250, 270, and then we'll see, what happens. But we've broken some major support, folks. That day that we had on the Mercury retrograde day, that was an outlier event, folks. I mean, the market to move 300 points and up and down like that was not good. And it basically, it would be speaking about the foreign markets that broke the market. It wasn't the fact that they didn't raise rates, is the fact that they're worried about the foreign market, as they should be, because emerging markets have been getting whacked, for years. They've been in bear market since 2011. We've only been in a bear market since, May 19th. We're just starting. And, we haven't picked up any volatility yet. And the volatility index is not showing anything either. So that's another one that you want to, pay some type of attention to here, because it also looks like it's getting ready to raise its head again, but I expect to see some greater volatility than we've seen so far. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, good morning, boys and girls. This is Larry Pesavento for TFNN, and we are looking at the market under a little bit of pressure so far this morning. We just opened. The S&P's down 31, NASDAQ's down 78, the Dow's down 266. Still a little early, so we'll see, whether anything happens with this stuff or not, but it's a little early. My guess is we've broken major support here. The $64 question is, will melt down or will rally from here? That remains to be seen. We did make the exact 786 in the Treasury bonds, so that's a little bit of slight hope for the bulls in stocks. So we'll see what happens. One of the things I do every morning is I double check to see, what's they're talking about on Bloomberg and CNBC. And, you have people that are still pretty bullish stocks, and as they should be, because the market's been going up, since July the 5th, 1932. But this last run, we've been going up for 18 months, basically, without any interruption up until that big break we had on August the 24th. That was the first time we've had one of those really flying Melindas where the market really took out some swing points. But then since that time, it's held up. And whether it's going to continue or not, we'll wait and see. But if the S&P gets below 1831, I believe it's going to be really hard for anybody to be very bullish on this stuff, because it's excuse me, it is a spot where it's a point of no return there, because if we break below that, that's going to tell everybody that there's trouble in River City, and it's going to be a little harder to stay in the bullish camp. But right now it's holding its own okay, and that's what you'd like to see if you're bullish. And if you're bearish, you want to see if it goes below this level and stays below it today. But remember, this is only the second day of the week, so that's a really good astronomical thing to tell everybody. That means that basically Tuesday has followed Monday like it always does. So we'll see what happens. Anyway, just trying to fill in some time here. We got gold continuing to go lower. We're down to near the 1120 level. Looks like we got another $8 to go in that level, and we'll see what happens with the rest of the things that we're looking at. So we'll see how the markets react. Right now, we're still near the lows of the day rather than any type of a rally as of yet, but it's still a bit early, as they say in the trade. Okay, moving on, we looked at the soybeans, we looked at the wheat, and now we want to take a look at the corn. And these are good trading markets, folks. I mean, they're not going to, burst into new bull markets. They're already in bear markets. So if I could just find the doggone thing, and then I'll be okay. Going through the same thing that I usually do, is I get all these things prepared, and then, there it is. If I could just see it a little better, and I'm sure there's a way to categorize it, but I don't always get it done as quickly as I'd like. But there's what we've got. You'll see the corn has just made yesterday, just made a beautiful 61% retracement. Mr. Z in the trading room, John Cheney, brought this out to everyone's attention yesterday, making a beautiful 61% retracement off the low on September the 11th. And of course, it had a very nice move of 12 cents. Which is $600 in corn, which when you're only risking $400, it's a very good 3-to-1, risk reward ratio, and that's very good for trading purposes. You can't beat something like that. Now, the currencies are a little bit different. I wanted to, this is something that I wanted to do. This is something for me because I think you'll enjoy this. This is we talked about earlier today about Larry Williams and how he was involved with Charles Lindsay in writing the Trident book, which is all based on AB equals CD. And I wanted to bring out the British pound here to show you the ABCD patterns that are here. There's actually three. I did the two on the right. The one on the left is the one from May to June, is also a perfect AB CD move. But if you'll notice, you'll watch the market repeat, because when it comes down, you'll notice there were three different segments there where it dropped for 13 days, 13 trading days. And on the upside, if you'll just look at the last ABCD leg in the British pound, it was 5 days up, and then it pulled back to a C point, and then boom, it went all the way back up in 5 days up in the D leg. Now this sets up that possible trading system that this thing gives you, because once you take out the B point, it gives you a price objective of point D, and all you have to do is to use some type of money management, usually like a $300 or $400, whatever it happens to be, and then go for your profit objective, which would be 1,000. So you have a 2.5 to 3-to-1 profit objective versus your 1-to-1, which many people look for. But the good part about this is that the probability of this trade working once it breaks through point B is quite high. And the reason for that is these ABCDs complete about 70% of the time, and that's a very good, risk-reward ratio in this particular trade using this methodology. So we'll see how that works. Now, I did know in 1974. Charles Lindsay came out with a teletype service where they were giving signals to everyone based on the, this was just in the commodity markets, mainly grains and the cattle and the metals. But they were using this ABCD format, and they would send out the signals by teletype. And you would get the. I was involved in it because I was a neighbor to Charles Lindsay because I lived in Westlake Village, and he lived there. And so actually, my wife and his wife were friends, and I was friends with Charles too because I respected him a great deal. He was a mathematician from SC. He had a PhD in mathematics, so he understood mathematics pretty good. He became really involved with religion the last part of the years that I knew him, and so that's pretty much what we're watching here. Anyway, they had this teletype service, and it didn't last very long, and I think part of it was it wasn't set up the way that it should have been, and there wasn't enough explanation to tell people how to use it because it was very valuable, I thought. But because some people misinterpreted what he was trying to say, that it ran into some problems, and so they just discontinued it, and then that was it, and nobody did anything else about it. So that's basically it. That system itself, the Thunderbolt or ABCD pattern, has been around for quite a while. Gartley brought it out in the 30s, and then Franklin Tubbs brought it back into the 50s, and then what was the dude's name in Santa Barbara? Doggone it. I'll have to think of it. But anyway, he also brought it out. And then there was one other gentleman in the early 80s came out with it, and it also did it pretty nicely. So we'll see what happens with the with this pattern itself. Okay, now. I want to leave you with this. We got plenty of time. What am I talking about here? All right. We're going to take a look here, and we're going to look at this. This is this longer term picture that we're looking at, and that is the New York Stock Exchange Index on these three major highs. I believe this is This is going to be the bigger one. It'll probably be. It might not be down as fast as we were in 2008, 2009, but I believe it's going to be longer. Remember, there's a gap in the Dow Jones Industrial Average at around 2,800. That's the gap from Desert Storm War in 1991. It was one of the biggest up days. Every single Dow stock gapped up that day because the war lasted only, I think, 30 hours is all it was. And so that's why that was one of the wilder days. I mean, compared to what happened on Fed Day, just the 17th, that was nothing compared to what happened on Desert Storm Day because crude oil was down $11 a barrel from $43 to $32 before there was any trading going on. I happened to be short oil, and when I tried to get a price overnight, they said there's no bids, and I said, "What do you mean there's no bids?" He said, "There's no bids." And I said, "Well, that doesn't." He says, "We don't know. There's no bids. Nobody wants to buy oil," and the reason why is there were no bids because there were no bids 5 or 6, 7, 8. It wasn't until $11 a barrel, and that was on its way from 42 all the way down to $11 a barrel that it made. Later on in that next year, in 91, I believe, in 92, is when it made its final bottom down around $11 a barrel. So anyway, this is a chart that makes you think that we are going to come down, a lot more and we'll see what see what's going on, with the market, and we'll be able to get an idea of what's going on. Okay, now we'll see. We've got the market rallying just a little bit. The Dow's only down 186 now. Big rally coming in. We got the S&P still down about 30. The NASDAQ is down about 75. And we got bonds. They're still up on the day, but giving a little bit back. Gold down $10, and silver down 43 cents, which is the bigger move of the group, which this old cowboy likes to see. Even though I'm very bullish silver, I happen to be short just a tad of that this morning, which certainly makes you feel better when prices go down when you're short than if prices go up and you're short. We have a question about Tesla. And give me a second here. I will bring it up and I'll show you. It's been one of the stronger stocks in the group here. And it's not a Volkswagen, folks. Volkswagen is having their own problems here with the accounting, whatever it happens to be, creative accounting like they use every place else in the business world. But as you'll see, it's gone up to the 786 retracement in Tesla, which means it's been a heck of a strong stock compared to the rest of the things. So there should be a lot of resistance up at that 272 level in Tesla, but it'll take a little bit of time, for this to come to fruition. In other words, when it's going to take a look at. Now, I had a question about the Dax Index. That's the index in Germany. We brought this to your attention on Monday because it was making a perfect Gartley pattern, and it did stop exactly at the 61% retracement at 97.80. From there, we rallied over 300 points. 1 second, please. We rallied over 300 points in one day, completing a big ABCD on this 30-minute chart up to that 102.40 level. And then in the matter of about 4 hours last night, we shattered the 61% retracement and went all the way down to the 786 retracement on this chart. So it's had a big rally off of that 61% retracement, and then it broke it and has now come down to the 786 retracement of that. So they're having wild swings over across the pond too, folks. It's not just us, and we haven't even seen wild yet. This is just the beginning. Wild is on its way. It's just beginning to see, they're just warming they're priming the pump, as they say, back in the old days of if you ever had a cistern where you had to prime the pump to get water out, which we did for many years. We didn't have in fact, I hate to say this, but we didn't have an indoor toilet until I was a sophomore in high school. So I was an old farm boy going back a long time. So that's how we lived back in southern Indiana in those days, boys and girls, but that's neither here nor there. Okay, I wanted to share with you what I think is probably one of the more bearish charts, and that is this S&P chart that we talked about several times using this 20-man line, which basically is nothing more than a trend line coming off previous lows, and it acts as a fulcrum, pushing prices down. And as you can see, if this is correct, we could easily make that 1774 level in the S&P without any trouble at all. If we can break from August the 19th to August the 24th, if we can break 300 handles, we can easily do that in a couple of weeks. So that's basically it. Okay, we're going to take a little break here, come back, pay a few bills, and then wrap her up.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I'm going to wrap it up looking at the New York Stock Exchange Index chart. After the Fed day, you had that big shooting star pattern. Bearish, the most bearish of all the candle patterns is that shooting star. We've had follow through to it with another gap down. We had a little bit of a small of a kitty cat bounce. Wasn't even a cat bounce, more of a kitty cat bounce. And now we've gapped down again, which is also a sign of some more weakness. Getting the Dow down about 300, 400 today would actually, I don't know if it'd put a nail in the coffin, but it'd certainly have someone start digging the grave. So that's be real careful if you're long stocks in here, folks, because they follow their own weight. They don't need any news, mainly because, you know, people start getting margin calls and then they start worrying the fact that their 401k or whatever else they're in is at a 12% or 13% pullback, whatever it might be. And that in itself will will scare some folks also. So we'll see if that's going to mean very much at all. We'll want to watch that very, very closely, I would think, if it's your own money. You're the one that has skin in the game, so make sure that you protect your backside, because nobody else is going to. You are too big to fail. Believe me, the Fed doesn't care about you. They care about the other little guys, but they certainly don't. They certainly don't care about you. But keep that in mind as you're looking at this. This is a very bearish picture, and as I mentioned before, the most bearish of all these charts that I've looked at over the this weekend and whatever days it happens to be is the banking index chart, and that is the one that looks just horribly bad. And it's just barely could make a ABCD to 382. And and Gartley said, look for the first ABCD in a new bear market, and that's what we assumed it was, and that looks like what it's going to be. And pretty soon we're going to be taking out those January lows, and then you got real problems. Okay, that's it. Live every day in an attitude of gratitude, and may God bless, and do something kind for someone who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.